Good afternoon, everyone, and happy Friday. Welcome to Trading Trends with John Salama. We're going to do ETF edition again today. My second day back here, new all-time highs across the board. We're going to focus on some groups that are really expanding and advancing, and I'm not looking at UTech. Just a reminder, I'll be on the morning show with JC Peretz and Steve Straza on Tuesday morning. And then if you're in New York City Thursday night, why don't you come on out and see me present on a lot of the big themes of the last year and what we foresee happening for 2026. Let's get into it. Some really big things happening today. Always believe in the charts, no narrative being spun, just truth all the time. Construction, a big day. Home construction up 5% today, still off the back of Trump's comments of buying MBS and everything that's going on in that complex. Defense tech, a big rally here continuing from the Venezuela capture last weekend, and utilities actually giving a little bit of a reverse jolt versus what we were seeing in the charts yesterday. So actually a little bit of a reversal there. In India, not reversal, no reversing there, continuing to decline. India not participating in the global bull market rally. And here we go. Take a look at this. I'll make it a little bit bigger here. New all-time highs for, boom, the Mac Daddy of them all, SPY, did it today alongside IWM and RSP. Everyone's 401ks, unless you're invested 100% in Fartcoin, is at all-time highs today. You can check your statements January 9th, never higher in human history. Congratulations. EFA, all-time highs for the Europe complex. XLY, Tesla monster day. I actually tried getting in it this morning. It ran away from me. I'm doing Western Digital instead, and it's working out well with a Sympathy Tech bid. GDX, the gold miners, all-time highs. The junior silver miners, all-time highs. South Korea, all-time highs. The Shield, Defense Tech, we just spoke of, all-time highs, as well as Germany. There's more we could have mentioned. There's Canada. There's the XME, the metals and mining complex. And now when we zoom out, this week, when all is said and done, was characterized by about 11% gains, double digits across the board. It's actually 10 to 13% in the aforementioned defense tech due to, the catalyst, what happened, last week. Silver, infrastructure for everything that's going on this year, and of course, search for alpha and one of the biggest leaders of 2025, and uranium, as all this AI needs energy, and they're going to uranium. So big weeks for those three. Let's get into the charts. Boopity bop. Hopefully everyone has a great weekend here. Go Birds. We're going to smack the Niners on Sunday afternoon. You know it. Okay, here we go. Really fast. We're not doing stocks today. We're doing ETFs, but we'll do it quickly. Tesla, a big one. Had an order in for the 445 call spread, and it ran away from me. Literally looked at the screen, popped to 443, and wasn't working. But the trade now, in hindsight, was a winner. Dang. Micron up 4%. I'm in Western Digital, and that's working very well. Micron up a big 4%. Yesterday was the hate of the semis. Today, monster day into the semis. You could see that. Intel up 10%. What is this, 1999? Silver up 3.5%. Broadcom up 4%. Was absolutely boomerang from yesterday. They got oversold in the semis short term, and they absolutely, lifted the offers today. That's about it. MicroStrategy down 4%. Not so great for that company today. All right, intraday here, and give me some feedback if you like. I like doing these 1 o'clock videos instead of the after hours. It really gives me a good perspective. It's technically halftime, another Eagles reference, but technically halftime right around where we're doing it here at 1 o'clock Eastern time. So it gives me a very good view after the morning lull and into that lunch and the European close. It really helps solidify some theses. So here we are at the opening bell. Really up and to the right, we had a little bit of a scare at 10 a.m. They actually sank it all the way down to 689. Surprisingly, congrats if you scooped up that, because VWAP then was 691.5. And we are off into the races, and the all-time high came just about 30 minutes ago. We hit 694.5 in the SPY. I've been telling you, my charts are telling me sometime like as of yesterday through very early to mid next week, looking at that 699. I'll get to it in a second when we do the little longer time frame. But right here, 694.5 is where we were. The high was 694.5, and they a little bit of a rejection. They sent it pretty quickly down to 693.75, but again, VWAP at 692.40, 692.40, still going north, and things looking very decent here. And a pretty average trading day. I think we have, how many shares of SPY here? 40 million traded, and we're averaging 80 on the day. So, all things looking good here. As I zoom out, so here is SPY. Whoops, that looks a little bit funky. There we go. One sec, I lost my Bollinger Bands. I need my Bollinger Bands. Okay. Hang on. They disappeared. Well, in the meantime, as that reloads, so I've been looking at the charts here, and I've been having this print looking for a long time for 699 is what I'm looking for. We got very close today. We're at 694. The strength to me is a little bit bifurcated. I still see more strength coming from IWM, and diamonds have done it. IWM's at all-time highs. Dow and Qs are a little bit lagging. It looks like tech has peaked Halloween week of 2025. Is that it for tech and human history? Of course not, but it is in slight correction mode. I've been, long queues made very, it was more so a place to park cash from basically Christmas Eve until today. I sold it and made a very small amount of money, but better than no loss. But here with SPY at a 61 RSI, just as we had said, when you see VXX put in that 25 print on the handle, this has been also where the exuberance has peaked. Right around the 62 RSI. We haven't been above that going back to when tech participated at Halloween week. So it's important to understand that. So let alone, no, we're not getting overbought, anything like that. We've peaked and hit our head every time at the 62, 63 RSI mark, and we're getting very close to it there. So still see a tiny bit of upside for, there you go. See a little bit of upside here for SPY into, the next couple days, but not a ton here. Then maybe exuberance gets you over like the 700 mark and you want to sell those calls, but I'm not doing that just yet. Like I said, bull call spread or selling bull puts are what I've been doing. And again, the 200-day moving average is 630. What I foresee happening over the next 2 weeks is a soft correction down to the 685 level. It's probably going to bore many people, as we look forward to corporate earnings kicking off. I believe in the middle of next week, JP Morgan usually does it on Thursday or Friday. I think they're doing it a little bit earlier next week. So check your dates for that. I think they might be doing it on Wednesday. But things looking really good. When I'm seeing SPY, RSP, IWM put in all-time highs, and VXX all-time lows, there's not much more you need to look at. So that's pretty much the roadmap for SPY. It's technically and actually quite literally the same as what I've said from December 23rd from before I left. VWAP of the day was 687. I still look for a move to about 695, 696, right around January 8th-ish. And then a pullback to about the 685, and nothing's changed. All right, let us get into the doc. If you have a ticker or something, put it in there. I'll take a look. There are some big movers today, and I'm not looking just at tech. Let's go to the ITB. Home construction, real estate, definitely in the forefront here based on, like I said, Trump's comments about housing and, BlackRock and Blackstone's involvement of buying homes, its institutions taking away, single-family homes from the everyman, trying to reduce that American dream, as it were. So here in the ITB, for me, the ceiling for this is right about, full targeted. I had 104 on this. So here we are at 106. They did send it as high as 106.5. And then a little bit of I don't want to say a sell-off because the thing's still up 5%. This is interesting. This is where it's peaked as well, going back to the highs from Labor Day week, where it was trading $118. So I'm looking at typical similar corresponding rollovers with the RSI. So it's been 65 each time, almost corresponding and extrapolating that from the S&P RSI, which we just spoke of before. This looks to me like it'll appreciate more so in time versus price. What I mean by that is a bunch of zigzags. So maybe this gets a half candle on Monday to send it down to 103, and then again to 104, where that to me is fully targeted. I don't think these highs, look at this strict, harsh ceiling it has at 106. We can be cute with it. Right around here at 106.30. It has not been above that since that plunge on October 7th when it gapped down. It's down 3%. And that's where it was under 50 RSI, and it just started coming back up Thanksgiving week. So, and it actually coincided with a break above the 200-day moving average, which currently sits at 99 quarters. So Interesting moves. The Trump comments definitely put in the low there at 97 and a big rip for ITB. There's a multiple 2.5 standard deviation move. So this is like a 9-foot person walking in the room. You have to notice it. It's not of the norm. The move that ITB has had this week, again, based on the president's comments and what happens there. You're also set to, for companies to buy MBS, and that's ripping today. Was going to feature that as well, but we did the home construction as instead. So as I said, I still think a little bit more bullishness for the ITB. XHB is very similar, home builders, as is home construction, a little bit different. You get Lowe's, Home Depot, and then different constituency in the allocation of each ETF. But this for me looks like fully target 105. I wouldn't chase it here. Maybe some ideas come, in the following week. You could probably sell those 99 puts, but I don't think you are going to get paid on that. Maybe 3 weeks out. Maybe you sell February, but home construction looks good. I like that it's carved out this base here, and I love that 200-day is starting to curl up. I just think it did a little bit too much. But you need to see, typical technical analysis. These candles should get smaller, and then the run is done, but also it's running into a resistance zone. So Monday will be very telling, in my opinion, on the home construction. So maybe sell those 99 puts, but you are getting towards the end of the what I think into this resistance zone after a big pickup. I think this is going to put a lid on this very soon. Next, new all-time highs for this group. It's been the big flavor of the day and the week. Defense tech, still based off the Venezuela. You can see what happened here. It really started on the whole year. Then you had a break above $71, and here we are, all-time highs at 75.30. Overbought. The last time this ETF saw this kind of fervor was early October, going into the 71 handle here. As you can see, that overbought registration. The volume nowhere near today what it was on September 16th. Different geopolitical instances then that occurred. But here you have four closes above the upper Bollinger Band. That's just not sustainable. Real talk. Trees don't grow to the sky. I haven't said that in a while. So here's the shield. I don't like chasing it here. This tells me it might not happen tomorrow because this, they're still sending it higher and higher. And you have an 80 RSI, which matches essentially the highs of all year. The only time it got higher was it basically got to an 82 RSI back in March, and then it consolidated for about a week and then continued to march higher. So a great ETF. This looks like South Korea. I mean, this hasn't had one touch under the 200-day moving average. Just an amazing ETF, defense technology. Still, probably in about 2-ish weeks, I do see this mean reverting to just about around $69, which sounds crazy because that is, $6 off or about 8%. But as folks flock into this line of bidding, I do believe the same way they will exit it just for a tactical trade to take profits, send it to about that $69 level, which was very meaningful for it. If you recall here, late October, before this plunge all the way down to $61. So I think that's what's going to happen with Shield. And then that would definitely be an invitation. You can put an order in, I think, in about 2-ish weeks. If you could participate in this in $69, I think you'll want to. New all-time highs for that Shield. Next, utilities. We got this one wrong. Utilities, we had said yesterday's video that this was, let me just pull up my notes, that this was going lower. Did not like it, but it was more so for a trade for over 2 weeks. I said this was going lower, had an ugly day the other day, which is why we were looking at it. It was down 2.4% 2 days ago. And I just think this is headed to 41.5 over the next 2 weeks. A very nice day today. Up 1.5%, a big day for utilities. That's a multiple standard deviation move, but I do not like structurally what is happening in the chart here. Sub 50 RSI since December 1st, blech, and it peaked October 16th at 47. So while a nice day getting into this crowded area, also look at the candle today. They sent it to 42.88, and I mean they did just send it down 0.5% lower from there. But this to me looks like a 41 handle. Next week, I'm trying to think of trades. If they put the foot off the gas and SPY, they could bid up utilities. Nothing really standing out. I looked at selling, put spreads here beneath this, but it just doesn't generate any income, so not worth it. But utilities, I still think overall lower over the next 2 weeks. Speaking of lower, India, oh my, down another percent is India at a very important point here now, under the 200-day moving average for the first time since December 17th. India not having a good stretch. Okay, this country peaked June 27th at $56. It's not a high ATR or average true range ETF, so it doesn't move crazily. It does have an upward swinging 200-day moving average, so that looks good, but the chart does not look good for the next 2 weeks. I think this continues to decline to about, not a ton lower from here, but right to about 52.75. And then I think that will be the structural floor in it. I don't think it goes much more south than that. And then, to be honest, if you want to take a chance on a global bull market, I think there are better swings, but with the risk reward at an entry of 52.75, I think your risk is controlled, and then you should have a rally to about 54 even. So you're not going to get really handsome rich with that, playing in option spreads. But potentially, I want to see this decline for the next about 2-ish weeks, like I said, with a floor of about 40-ish cents from here, or maybe about another percent. I want to see these candles get a little bit smaller, right around there, as I was saying, and then that will be your entry for a long. But I'm not looking at doing that till about somewhere around like the 24th or so of January. But this one not looking so great, India short term. And then only 2 losers today. And this one's a reverse because of its VXX, the biggest loser of all. VXX down 2%. And look at that little carrot, a new all-time low for volatility. I also saw a report that asset managers have the biggest vol short of all time as we speak. So, this isn't just me saying this. It's pretty much everyone knows this. Crowded trades usually don't end well, but this one has been working. We have been truly without any type of fear. I'm doing this technically speaking since we were above a 50 RSI. November 21st was the last time we had actual fear in this market. And that's when VXX was trading $38. We are now at $26. I do think you enjoy if you're long VXX. I don't know why you would be. You should schedule a CAT scan for yourself. But I do think you should anticipate a bear cat. I keep on saying bear cat. Dead cat rally, dead cat bounce to 28 over the next about 10-ish days. And that'll be as good as it gets for that. So again, not an amazing amount. We haven't even been above 40 RSI in VXX since December 2nd. So when I talked about tranquility the week before Christmas, this is it right here illustrated. Okay, so VXX, new all-time low. Good golly, Miss Molly. Top 3 gainers of the past 5 days. You might have some repeats here. Number 1 gainer, and this is all from Venezuela, up 13% in the past 5 days. Absolutely remarkable. Is SHIELD, the ETF of the week. If you were in this and you just said, oh, you know what? Let me wake up Monday and let me just buy the gap, that breakout. Congratulations. You got that 13% off that alone. So I'm not really going to do the, oops. There we go. Like I said, this looks like a great ETF, obviously, one of the leaders. I think the gains are going to go away short term. To me, I'd much more angle that $68 entry point in about 2-ish weeks. This one's very hot right now. I personally wouldn't chase this right here, although it is up 3% again. And again, these are all-time highs here. So, and this ETF only came out in September 2023. So as you can see here, this thing's just been up and to the right. An absolutely phenomenal ETF. And while I just have it up, if folks are saying, what is in this thing? Is it all, Palantir, or what is in this? I will pull it up for you here. It is Raytheon 8%, Lockheed Martin 8%, General Dynamics 8%. So a quarter of the fund is that right there. And then Palantir is also 8%. So if you go to war, you buy an ETF like this because, it's kind of like that thing. If we're dead, you're dead. You're not going to really care about your investments. Otherwise, this will be profitable. So there you go. That was number 1 of all the week. Number 2, silver. Okay, silver, an amazing week, up 11%, just about 2% a day. Today, still bucking that trend, up 3.5%. This peaked January 6th at nearly $74. Here we are at $72. It's not quite overbought anymore, but this thing has been surging, my God, above 60 RSI since Thanksgiving. So the line has not stopped to buy silver. They buy first and then ask questions later. This is providing a lot of the infrastructure for what we need this year and going forward. I think there's a chance. It was moving volatile a couple of days ago. It was down 4%. And then, of course, it rocketed back up 6.5%. I think you may get an opportunity at about $65 in the next week. It might come with a bit of a flash crash type move like silver does. And then that would be your entry to participate, because my target for this is still about 72 where we are today. So I don't want to chase it here. I don't want to sell the 75 calls because folks get a little bit crazy with silver positioning. But I would more so angle and wait. You could sell bull put spreads, but I don't know how handsomely, like I said, you're going to get paid for that. So for me, more of a sit and wait. If you get the entry about $64, $65, take it. The chart looks absolutely untouchable, just phenomenal since spring. Thirdly, AI needs energy. Where are they getting it from? Uranium, a monster week, up 10%. Looks like the digital economy peaked in October, and now we're going into real physical hard alpha. Silver, things you can touch and whatnot. Gold, silver, like I said, things that we're actually putting into materials. Uranium, as we pivot here, did peak in October at 60.5. Look at this candle today, up 1.5% on the day. They actually rocketed it today to 52.80, and then boom, they sent it lower. They do on uranium here, up about 2% a day. Today, just inside that, up 1.5. I don't want to buy it here. As I said, I think it was in yesterday's video. This, to me, I don't think takes out $51. An amazing chart, but I don't think it takes out, back to these November levels at 51. And it's pretty amazing. Got to 53, but look where it is now. It's not how you start, it's how you finish. And here we are at 50 quarter. So for me, I think over the next 2 weeks, this is going to head to about 46.5 to $47. And that will be your entry to participate. This thing's been on absolute fire since May. Is uranium with a peak in October. I think that'll be your invitation for uranium. So that'll be a pretty decent move. That's about a $3 slide on a $50 stock. So best trades of the week: SHIELD, silver, uranium. Congratulations if you're in those. Let's look at the losers in memoriam for nat gas. Oh my goodness. Down 9% over the past week. Today down 5.5%. New all-time lows. 10 handle on UNG. Looks absolutely hideous. Absolutely hideous. We will have Chris Miller, I believe, next week or so. We will talk to him. He's pays attention to natural gas quite closely. We'll get his insights. I'll follow up with when we're going to do that. But this looks ugly here. This, simple, nice little meerkat here on December 5th really, really spooked or spoofed people, because someone paid $17 for this 5 weeks ago, and now it's down massive. The only thing I will say positive is that you're not getting an oversold reading, but the candle's horrendous. I didn't think truly we were going to get this low to a 10 handle. I thought it would get basically, if you look at the structural lows, I mean, this was going on since August. It put a floor in an 11.5, 11.5, 11.5, and then boom, 10.5 quickly. So from false moves come fast moves very, very quickly. Nat gas, I think, will still be on the decline in the next week. My floor is about, to be frank, I had it around 1080, and we got through that today. I don't want to buy puts because it's really already swung to the downside. Let this thing finish. If you want to play it for a dead cat bounce, there you go. I think it will head to about 1220 to 12.5. But that's not the trade I'm putting forth. You can probably sell those calls too, as some of the temperatures get a little bit warmer here on the East Coast. Although not for Sunday's Eagles game. It's going to be real windy. I don't know when Philly turned into Chicago, but it's going to be a windy kickoff. Expect a lot of Saquon and Jalen runs. But yeah, I see a bear rally here to about 1230. And that's pretty big on a percentage basis. So if you wanted to play that, be careful with the options. They're very cheaply priced, because at the end of the day, it is a $10 POS stock. All right, number two, I had to really squint to find losers besides nat gas. Solar was number 2. This was down 3% this week. So again, nat gas hammered down 9%, almost 2% a day. Today, 3x that average. Solar down 3% on the week, down 1% today. It tried to get to this high. I know some traders that were really bulled up on solar said it looked really good. And the chart does look overall good, but it did peak on, Veterans Day here, about 53.68. It got very close. You always want to be aware of double tops, even with constructive charts, to see if it's ready or not ready, because in options, you pay for time. You don't want to bleed that theta out and hemorrhage. I don't like this chart here. Some important figures to understand is the 21-day exponential moving average is where we sit right here at 49.80. It has not really gone below. So it has been strong, holding a 41 RSI since Easter. Okay, basically 2 weeks coming off the low. And this has had really good structural, constructive trading here. And then in July, you got above the 200 moving average. And then here with this big day on August 15th, this up 9% day, the 200 moving average started to curl up. So understand why folks are bullish on it. But I think this run, the short-term run, began here right around the December 17th when we were saying, buy stuff, but on this everything rally, essentially non-tech. And you had that move from 47 to 52, pretty decent, 10%. And I think that might be it for now. Where do we see it going for the next 2 weeks? Probably 47 on the low side. It may just rest and hang in here around 49. It has been pretty strong, but I don't want to buy it here. I see it probably settling around 44 RSI, which corresponds with about a 48.5 spot price. So in terms of trades, see how the volatility is, but I would probably sell the 51 calls, no problem. But again, got to check to see if the premium's worth it. And then our last one, down just as much as solar, is India. We looked at this one again. The losers this week, nat gas, solar, and India. Okay, they are not feeling the love. Nat gas, solar, and India. Here's the India chart. We already spoke of it before. Just let this one, as I said, sit out for about 2-ish weeks. It does not look hot to me. And then when this rests truly right around 52.75, I like that level. I do think you'll be okay in terms of risk reward there. And then you should get a bounce to about 54. It's going to frustrate folks, though, because it's going to go above the 200-day moving average. And then we'll see what happens on the next correction. So overall constructive, but I don't think you're going to make a killing, obviously buying short-term options on that. So top 3 trades of the past 5 days. If you have been long SHIELD or the defense tech, silver, and uranium, congratulations. That's how 2026 is starting. I think those themes are going to be there when we're still here in December, to be frank. I don't think they're going anywhere. Defense tech has an amazing chart. Silver, same thing, as is uranium, although with a little bit of fits and starts. Have a wonderful weekend. Be good to one another, and we will see you on Monday. Go Birds!